Today, we're joined by William Rhind, founder and CEO of Granite Shares. And we're going to talk about all things in the market. We're going to talk about AI. We're going to talk about Palantir, of course, institutional investors, and also talk about some of Granite Shares products. Firstly, Will, I think it'd be good to get a little bit of information on your background. What got you into finance? And also, you were previously at BlackRock. What did you do for them? And what did you get up to at BlackRock? I think that's a pretty interesting experience for our viewers to learn a bit about.
Yeah, so I started in London, so just after college or university, first job, going into the city and working at an investment bank. So I started at a Japanese investment bank, actually Nomura, and worked there for a year and a half, and then sort of by chance ended up on what we call the buy side, which is the asset management side. And at the time I started my career, it was just after the dot-com bubble had burst. And so different sort of job opportunities, or the market wasn't great at that time. And I found an opportunity at what was then called Barclays Global Investors, which then became BlackRock, or was bought by BlackRock just after the financial crisis. And I started there when we were launching the first ETFs in Europe. And so really found myself at the right place, right time in terms of the dawn of the ETF industry that we know now today, and ended up working and specializing on ETFs within that team. The iShares team, that brand is obviously still very well known today, and ended up following the product basically for the rest of my career.
Okay, so BlackRock is, I believe they're the world's largest asset manager. I think they're holding about $10 trillion at the moment, which is obviously huge. What was it like being in an institution with that much money around, also like that much power and influence as well, whether they want to like move markets or write huge checks or have probably interesting people knocking on their door as well? I don't know if you had any exposure to any of that as well.
Well, I think at the time it was smaller, but even then, when I say smaller, I mean on a relative basis, that I can remember when we had 500 billion under management, which was around the time when I joined. And it wasn't too long, it didn't feel like that much later that we crossed $1 trillion. And I remember $1 trillion just feeling like a crazy amount of money at the time to be managing. And the majority of the clients that we had at the time were, massive pension funds, sovereign wealth funds, these kind of people that, were allocating, hundreds of millions, if not billions, of dollars into different mandates. So, that was kind of an interesting side of the business where you had, these massive clients that were allocating money. And, from where I sat on the ETF side, the business was very, very, nascent at that time. But you could just see that this was a high growth area. This is something that clients wanted to talk about. And, it was just a question of, how big was that going to be?
Yeah, that's super interesting. So for me, my financial journey investing started sort of 2017, 2018, and ETFs has always been around. So ETFs wasn't a big thing. And you obviously helped pioneer that and bring that to market. Is that right?
Yeah, I mean, when I started, it sounds crazy to say because I'm not that old in the grand scheme of things, but when I started, 25 years ago, there just weren't that many ETFs in the market. It was really just taking off. And you could probably name all the ETFs in the world, by ticker code and, the count on one hand, the number of providers. We're obviously now we're in a very, very different world, trillions and trillions of assets under management just in ETFs, hundreds of different players, loads of different products. So it's a completely different world now. But once you understand that the ETF essentially is just the new technology that replaced the old technology, which was the mutual fund, then it sort of makes a lot more sense.
And then moving on to Granite Shares, which you are the founder and CEO of, not many people can say they've launched an asset management firm. You are someone who can say they've done that. I'm sure it's been an interesting journey. Can you give us a bit of insight? What's that been like?
Yeah, so like I said, I think, my career, to oversimplify, has always been around ETFs. And I've been lucky enough to be in this, massive growth industry. And from there, I think it's a question of, trying to, figure out, how to get more involved, how to optimize for that growth. And, ultimately, this is a sort of a product design based business where you're trying to invent new products that you hope people will invest in. And ultimately, at bigger shops or big firms, you have a lot of politics and bureaucracy that comes along with that. So you might want to launch or have good ideas, but that's not going to happen within a big corporation. So ultimately, you have to sort of make that decision. If you think that the ideas you have or the products you want to launch are good enough, then you have to back yourself and go and do that. And so that's what Granite Shares is that it's a culmination of experience within the industry, but ultimately it's about me starting a company that we thought we had a way to launch a better product at a lower price or something that nobody had seen before, lots of different differentiators. And we set up the company in 2016, raised venture capital money. And, that was it. Launching an asset manager is not like, setting up a website. It's something that, costs a lot of money because there's a big regulatory hurdle to overcome, first of all. So there's a regulatory and infrastructure hurdle that means you have to spend, several $1 million as opposed to, something that you can kind of do in the back of your garage. Leaving that aside and the specifics to our industry, at the end of the day, it's building a company is probably very similar to anything else. And, you've got to find that what makes you different. You've got to be able to set yourself apart from the competition and ultimately offer a product that has real value to people.
So you've alluded to this a few times. Was there a specific opportunity or product you saw then, or innovation or gap in the market, and you were like, right, this is my moment. This is what we want to go after. And if so, what was that?
Yeah, so I think most specifically, probably the biggest idea that we had was the leveraged ETFs on single stocks. That had not been done before. And that was something that we felt was a big opportunity, that if anybody could crack the code on how to bring that to market. And when we started the company in the US in 2016, it was sort of further, there was a massive impediment to doing that, which was that there was a weird regulatory quirk at the time, which meant that only 2 companies were allowed to launch leveraged ETFs, and we were not one of them. So we couldn't actually launch any leveraged ETFs at the time, and had to wait a few years before ultimately regulations changed and the pathway was sort of opened up for us to do this. So we actually started really going in a different direction, whereby we decided to try and disrupt the commodity ETF world. And that was a world at the time where the big players didn't really participate. So Vanguard, for example, didn't have any commodity ETFs, just wasn't part of the suite. You had BlackRock with a few funds, but nothing really outside of gold and silver, essentially. And then you had State Street, which is the other big player, really with just one gold fund. So we thought there was an opportunity to create a commodity suite that could compete both in terms of the breadth of products, the core products, but also on cost. And so we were the lowest cost player in the market in a world where we had a slightly better structure than others. And so that was kind of the way that we launched. So a slightly different tactic. But we're able to gain market share on the commodity side, while we were at the same time working on bringing these new leveraged ETFs to market, which ultimately we were able to do a few years later.
So you launched 2016, and you said at that moment in time, the leveraged ETFs there's a lot of regulations and only 2 players in the game. How long did it take until you managed to launch one then?
It took a long time. So actually, technically, we went live with our first fund in 2017. So we started the company in 2016, but it took a year, to build the asset manager, get the infrastructure in place, get the regulatory licenses, etc. So we went live in 2017, and it wasn't until 2022 that we were able to launch the first leveraged funds here in the US. We actually launched in the UK earlier with the first leveraged single stocks in 2019, end of 2019. So we were able to sort of start that business there and then ultimately bring it to the States a couple of years later.
We'll come into Palantir shortly, which is obviously what a lot of people watching this channel will be interested in. Firstly, though, I want to talk about markets and I want to talk about AI. So broader trends, AI, tech growth, interest rates, investor appetite. How do you see all those things going on in the macro market at the moment? What's your sort of perspective and vantage view on that?
Well, I think that, let's start with AI because we're going to talk about that probably quite a lot. But, that is the most powerful investment theme in the market right now. That really is the major investment theme of the last 2 years. And I think will remain so certainly for some time to come. That is the focus and obviously help propel Nvidia as one stock to the most valuable company in the world. So AI is really what's driving everything at this stage, but is the most pervasive investment theme. And the companies that are seen as being heavily involved in the AI investment theme are really the ones that are winning in the market right now. And I think the market itself is in a good position. At the end of the day, what really drives the market are the companies themselves and the earnings that they report. And so far, certainly the larger tech stocks in the market, the Mag 7, but the largest companies in the S&P are posting good or positive earnings, which is driving the market forward. You put that in a backdrop of inflation being under control, of interest rates certainly coming down in the back half of this year, and an economy that is more or less at full employment. And I think you have a picture that is obviously pretty conducive for investing more broadly and the market more generally. And that's why we have a market that is trading at or near all-time highs. I mean, talking about the US market, of course.
Yeah, I think you're exactly right. And, the markets are at all-time highs, but you mentioned some really important things there. Good employment, companies' earnings are accelerating. I mean, where we're just about to see interest rates be cut. They've been cut in the UK a few times already. No one cares about the UK. They're hopefully going to be cut in the States coming towards the end of this year. I mean, I don't know what the poly mark is, but it's going to be pretty dead set that's going to happen. So we're at all-time highs. Are we probably going to push higher, do you think? Like, as interest rates cut, one would assume it's a bit more risk on appetite, multiple expansion, etc. So yeah, I mean, what are your thoughts on that?
The short answer is yes, because if you again put it back to what's driving the market are the largest companies in the market. Those companies are growing still at a very significant rate. And if you look at the biggest company in the world, Nvidia, which is still growing at a phenomenal rate for the size of that company, down to other companies that everyone's very familiar with, is that we're at the end of the day talking about companies that are in growth mode, and that growth compounds over time, but clearly is feeding into the earnings that they're posting on a quarterly basis and the health of the overall business. So yes, those companies are growing and therefore the market's growing.
So that is where the best opportunity is in this market at the moment?
Yeah, I think that, and probably as a second, the other theme that's been incredibly popular and has gotten a lot more momentum, at least over the last couple of years, is crypto more broadly. And I know that's a very broad church, but certainly a huge amount of renewed interest in the crypto sector. Everything from the cryptocurrencies themselves, the major cryptocurrencies, to the exchanges, the miners, all the different sort of participants in that ecosystem. So that's another one which has received a lot of investment interest.
So moving over to AI specifically, you must be surrounded by a lot of institutional investors. You're in New York, so you're on Wall Street. AI, what are the institutional investors making of AI at the moment, the opportunity of it, and then company valuations?
So I think, we have to sort of caveat this a little bit by saying that institutional investors are no different really to ordinary investors at the end of the day. And that there are people who are absolutely 100% bullish on AI and everything associated with AI. And then there are the other investors that, they let's just say they're not bullish on AI, or maybe leaving aside whether they're bullish or bearish, the valuations of certain companies are perceived to be too high for them, and therefore they focus much more on value-orientated stocks or stocks with lower valuation. And so there's always that push and pull. I think the people that are of the growth mindset, are all in on AI, very much believe that we're in the early innings here, that this is like, we're in the early stages of the fourth industrial revolution, that this is the force that will change, all of our lives here in a way that, nothing has done before. And therefore you want to be on the ground floor of this, and, you're trying to pick the companies that will perform best in this particular environment. And then you'll have the other guys that, may or may not be persuaded by that particular argument, but will not buy a Palantir or something just because they feel like the valuation is too stretched. And they'll be buying, in the sort of Warren Buffett-esque, playbook, they'll be buying companies that have a lot lower valuation. And this is the kind of the push and pull between value investing and growth investing that's been going on now for as long as I can remember.
So if we put AI in the context of companies around the world, you've got the startups, which are full send on AI. You've probably got then like a bunch in the middle who are trying to adopt it as fast as they can, bring it into their workflows, make the most of it. There's going to be a lot of old school companies out there who they're just using ChatGPT, or they think AI search on Google is amazing. They're going to be just scratching the surface. If we were then to try and get an understanding of how it's on Wall Street at the moment, if you move the valuations to the side, and let's say the valuations weren't so rich that some investors just aren't even going to look at it, would you say that most of the finance industry is looking at AI and is looking to progress forward? Or is there a whole class of, for lack of a better phrase, dinosaurs who just don't want to touch AI, aren't looking at it, aren't interested, whatever? How do you think about that?
Well, I think that everybody's looking at it. And if anything, I'm trying to think of the example where you couldn't be in some way exposed to AI, because regardless of whether you like it or not, regardless of whether you're trying to embrace it or not, it's a fact of your everyday existence, and it's only going to get more interesting, more integrated with things you're doing. So you're right. I mean, maybe there are people who are still, just using ChatGPT, et cetera. But it's everywhere, and it's only going to get better from here. I always say, that AI will never be as dumb as it is today. And, from that perspective, it's scary to think about, what the possibilities are and how it will change, everybody's life.
So Palantir, obviously a huge AI company. It's important for your company as well, which we'll touch on. Again, you must speak to a lot of institutional investors. You must know what it's like on the street. What are they currently making of Palantir?
I think, again, it's fair to say, to try and be as balanced as possible, that you'll have that split between the growth-orientated investors and the value-orientated investors. I think the growth-orientated investors will be completely dialed into Palantir going to $1 trillion or being $1 trillion plus company. And, from a valuation perspective, it's less about the value of the company today. It's about the value of the company in a few years' time, and the opportunity to be, right at the sort of the fulcrum of the AI data solutions that the company is providing, not just to big governments, but to corporations around the world. And so, I think that is very much the thesis. And if you're not on board with that, it will always be a technical argument around, the valuation or something or other that will kind of put you off. But for those that are interested in Palantir, interested specifically in AI, it's going to be about growth. And for growth, it's not a growth today. It's where's the company in a few years' time story.
You mentioned that split between government and B2B. So for anyone who's not aware, Palantir's got two core business models. Okay, they help governments, they help them with all sorts of different things, and they help businesses. Some people like that balance, some people don't. What are your thoughts? And so the reason some people don't like that is because government can be slow and archaic and slow moving and things like that. And they want to go full send on the B2B side, the SaaS, the exponential growth. But some people like it because the government contracts offers a bit of stability. What are your feelings on that? And then also, what do you think other investors around you in New York sort of think about that?
Well, I mean, I think that's a good thing because if anything, that's the hardest part of the puzzle to crack is doing any kind of business, particularly large scale contracts with governments, because of all of the things you just mentioned. But the procurement processes can be very cumbersome, detailed, and just to be able to get some of these contracts, I think is a big coup and be ingrained in a lot of the key government departments, particularly on the defense side. So to me, it's almost the opposite way around. Almost I see the government work as being huge plus for the company that they've been able to get that done. And then now the almost the easier part is focusing on the pure commercial side with other corporations that can make decisions quickly and can integrate their software or AI solutions, on a purely commercial basis if they see fit. So I think the government business has been undeniably a huge plus for the company. It's very lucrative work, big contracts, large revenue. It's sticky, and I think the B2B opportunity clearly is big, on the pure commercial side.
Yeah, I think that's a good angle. I think if you can do it in the government realm, then you can probably do it in the business realm. Alex Karp and at the business, they often refer to Palantir as battle tested. And part of what they mean by that is the fact that their software and technology is used on the battlefield. But I think they've also won the battle of government procurement, right? A lot less sexy, but probably just as impressive.
Yeah. No, I mean, think about how difficult that can be, to get some of these massive contracts with, Department of Defense or whatever it may be. I mean, they can be hugely complicated.
Definitely. And then that is a natural segue onto Alex Karp. Now, a lot of founders, a lot of CEOs are often quite crazy, wacky individuals. And sometimes we love them for that. I'm a big fan of Alex Karp. I'm a big fan of Elon Musk, as divisive as that may be at times. How do you think having a CEO and founder like Alex Karp goes down from, again, a New York institutional kind of perspective?
Oh, I don't think there's any negativity around him at all. If anything, there's huge praise for what he's done with the company, what he's achieved, and clearly Palantir is a rock star company, whichever way you cut it. You can choose to not buy into it, but you can't deny that that's been an unbelievable success, and he's a big part of that.
So something which has come up a couple of times already is Palantir's valuation. What do you think about their valuation at the moment? Are they overvalued?
I mean, it's all about your perspective. Again, if you think that Palantir is a $1 trillion plus company in the next few years, then they're not. They're a company that, just like Nvidia or other companies in the market that are growing rapidly, the valuation, if you're comparing it to a large cap, stock that is not on a high growth trajectory in the S&P, then yes, the valuation is going to look a lot higher. But Palantir, some of these other companies are growing into these valuations over the next few years. And again, you have to believe that, you've got a multiplier effect, in AI deployment, and that, the CapEx that the hyperscalers are spending on AI, there's a multiplier effect within that industry that tumbles down to all of the companies in the space. And so I think that if you were to look at the company today and clearly say this is going to be a $1 trillion plus company in a period of time, then it's not overvalued. But if you were to compare it to, the valuation of Coca-Cola or something, then you'll get the people that say, "Wow, look at how overvalued it is," and that's what makes the market.
That indeed is. So something that retail often likes to toot its own horn about is saying they're so much further ahead than institutional investors. They're picking up trends earlier. They understand maybe companies at a deeper level, maybe because actually often retail analysts spend all their lives devoted to like one company or a handful of companies rather than monitoring a whole market or a whole basket of stocks. Do you think retail has been ahead of the curve on AI? And, you look at Palantir's run, you look at Tesla's run in 2020. And do you think then retail has an advantage sometimes in these breaking new trends, new cycles, new super cycles? Or do you think that's not the case, which could also be fair enough?
Again, depends on the way you look at it. I would say that the one thing that I've noticed, or I can see that you can apply, I think, to a lot of retail investors, and again, this is a gross overgeneralization, but I think it's important to say, is that they're not held back by the traditional investment dogmas, like, for example, growth and value, particularly around value investing, which I think can really inhibit a lot of professional investors that almost they can't get out of their own way. And when you can't sort of see the wood from the trees, that is a weakness clearly that can lead to, massive underperformance or missed opportunities. And I think that sometimes what you see with retail investors, whether it be in some of the big tech trends, et cetera, they're not really held back by these dogmas and can view a trend for what it is and say, AI is going to be huge, or, Tesla, full self-driving, or robotaxi, whatever it is you kind of choose to look at. And you can be part of that trend in a way that perhaps institutional investors or certain institutional investors might not, at least not get in there as early, for example, or not see perhaps the potential in that particular lens.
So you guys at Granite Shares, you have a Palantir product. Can you explain what that is and what sort of investor that might be good for?
Yeah, so I think maybe just to start with, what are we trying to do? And I said, we are creating investment products that people love based around all sorts of different, investment themes and ideas and expressions. And one of those is leveraged single stocks. That's been probably the biggest sort of hit that we've had. And put very simply, these are leveraged ETFs that provide 2 times, in some cases 3 times, depending on what market that you're in, the daily return of an underlying stock. And that was a revolution for investors based upon previous access to leverage. In other words, you could go to a brokerage account and you could try and take out a margin loan, and that would be very cumbersome to do, incredibly expensive, and you would be subject to margin requirements from the broker, which depending on what the stock did or the underlying investment did, could end up you being stopped out. So what leveraged single stocks do is they effectively have disrupted the traditional margin business and now allow for people to invest with leverage in ordinary brokerage accounts without margin, much more cost-effective solution, and you can buy and sell whenever they want. So we started providing these leveraged ETFs on popular companies, of which Palantir is one of those companies. And so PTIR is a ticker code, but that's our 2x leveraged Palantir ETF here in the US. And we launched that product literally, I think it was about a week or 2 weeks before Palantir went into the S&P 500 and really started this massive run that's continued up until this year. So PTIR is just simply the 2x leveraged Palantir ETF and allows people to take leveraged investments on Palantir. And again, that's sort of the main message I think that we want to get across to anybody who's interested in more magnified or potential for magnified gains with these products, is that there are typically leveraged single stock options available. We create other products that are around stocks like Palantir as well. But the main expression is the 2x or PTIR.
Okay, so you mentioned Palantir. What other companies do you have with this optionality on as well?
So we do most of, I think you would say, the large tech stocks. So everything from the likes of Nvidia, which is our biggest one, NVDL, which is 2x Nvidia. So that's huge for us. Tesla, TSLR. We have likes of Microsoft. We have Coinbase. Huge big selection, which is probably more than I can just sort of reel off the top of my head. But they're really centered around, I think, the core themes of AI and crypto at the moment. And you can see the list that we have on our website, for example, graniteshares.com. And then we have a very exciting range called Yield Boost, which is another big trend, which is really options-based income generation. So instead of just investing via a leveraged ETF for, say, maximum growth over a short period of time, like 2x return, we can sell options against some of those underlyings and generate a very high yield. So a lot of people want to participate in the volatility of some of those names. They might have, for example, a long position in the underlying stock, but then might be investing in leveraged ETFs around the earnings calls, around big news events, and or these yield boost ETFs to generate income or high levels of income from that as well. So there's all sorts of different ways that the ecosystem grows and gives people access to different things. And whether you're a long-term investor that just is happy to buy and hold the stock forever, whether you're somebody that's more of a short-term opportunist looking to take advantage of dips or news events, or whether you're somebody that is optimizing for high income. There are all these different avenues available.
And these they're only open on the long side, not the short side. Is that correct?
That's right. So we have short ETFs in some cases. We do not have one for Palantir, but we do have for something like, for example, Coinbase or Tesla, Nvidia. So we do have for some where there's just so much interest in both the long and the short. But for Palantir, it's just 2x long.
Okay. And then for anyone who's maybe not familiar with these, what are just some of the natural risks which should be just considered if taking advantage of these sort of products?
Yeah, I mean, the biggest risk is the opposite of the reward, which is if you have 2 times the potential reward, you have 2 times the risk. So the simplest example is if you take PTIR, that's 2 times Palantir. If Palantir goes up 5% in a day, PTIR will go up by 10%. But the opposite is true, and that's the risk with leverage, is if PTIR goes down by 5% in a day, if Palantir goes down by 5%, PTIR will go down by 10% in a day. And so outsized risks, outsized rewards, that's the proposition. So like anything, people should fully understand what the product does. But when you have leverage, it's not just always the case that it's outsized returns, it's outside risks as well. And if it goes in the opposite direction, 2x means you have 2x the losses as well as 2x the gain.
Okay, sweet. Now, thank you for sharing those. Moving back to broader themes, who for you have been some investors who you potentially look up to, have learned a lot from, or idolize in the world of investing, and people that you think maybe other people should research and check up on as well?
Well, I think let's maybe focus it a little bit more in tech. And I think that there are a number of people who kind of interesting. So first and foremost, we're living in a world where I think we've never had kind of better leaders in the tech space and more transparent leaders, whereby if you want to jump on an earnings call from Palantir, or if you want to hear interviews, the CEOs for the most part are kind of very much public figures, front and center, talking about the company, talking about the opportunities. So I think that is great. We get obviously a huge amount of information from the Jensen Huangs, from Alex Karps, everyone out there. I think in the tech space, somebody that if you're not following him or reading his stuff is very good, I think is Dan Ives. He's an analyst from Wedbush, which is an investment bank, investment firm that covers a lot of tech companies. I think he puts out very good research. He's very bullish on AI and tech more broadly, but I think has covered it well. He's not an analyst per se in the same vein as Dan, but Tom Lee is another one I think that is been able to call the market, very well. His company is called Fundstrat, for those that are not familiar. But again, he's a sort of fairly public personality in the investment world that talks, I think, very thoughtfully about AI and about some of the companies in the space and markets more broadly. But there are a lot of good people, and there's a lot of good information out there that people can consume about whatever investment topic you're interested in.
So which companies then, maybe outside of Palantir, are you most excited about at the moment? And what is necessarily sparking those specific interests for each one?
I mean, I think maybe it's a little bit obvious, but Nvidia, that's the company that sparked the entire AI revolution. That's still the most important company. That's the company that everybody, hangs on every word that they say, and earnings. That's, timing wise, it's pretty much the last company to report. So we start with the earnings cycle with the Microsofts, the Googles, and things. Then we get finally to Nvidia, and that's really the last one to report. So I think there's still massive upside in AI. Clearly, that for Nvidia, and I think Nvidia could be a $5 trillion company as well in the next couple of years. And so there's a huge amount of growth still there. It really feels like we're still in the early stages of AI, with now major governments, et cetera, jumping in and purchasing Nvidia hardware at a very impressive rate. And again, this all goes back to the status of AI, and I think, like I said, we're in the early stages. Tesla's one that, for slightly different reasons, I think has some amazing opportunities and some game-changing technology, particularly around full self-driving, robotaxis. This is one of the applications of AI, the real-world applications that people are really waiting for. And when people talk about, the next step in ChatGPT, they're looking for something which is not just a more intelligent version of search, but they're looking for something that is a real world, game-changing application using AI. And of course, there's nothing really, I think, that will make a difference in people's lives more visibly than driverless cars. And that's just something that anybody alive today has only ever experienced, being in a vehicle with a human driver. And so when you experience being in a vehicle without one, that will be a very, very different experience. And clearly Tesla's at trial at the moment in the US, that's coming, and that will be a big opportunity for the company. And so there's a lot of interesting things going on in the space, of which those are just two very small examples.
Yeah, I think Nvidia is definitely one which has obviously been on a historic run and arguably has a long way yet to go, especially if you look at CapEx spending moving towards the end of the decade. I think Jensen recently said he expects, was it $2 to 3 or $3 to 4 trillion in infrastructure spend between now to the end of the decade, which is obviously unbelievable. Do you have any thoughts on AMD? They're a company which is actually getting quite popular in the retail space as maybe a second runner as the technology is improving, and obviously that addressable market is so huge.
Yeah, absolutely. And I think in a world where, it's like in a world where gold prices are rising, then silver prices, also rise. And I think that you have a clear trendsetter in the space, which is Nvidia, but they're not the only company that's going to make money from AI or that is benefiting from AI. And there will be other, chip companies that benefit as well, just maybe not to the extent because of all the reasons we know, but AMD is certainly another one. You have the US government, taking a stake in Intel, the big strategic battles now for, control and influence over the production of AI hardware and the distribution of AI hardware. And AMD is certainly in the sweet spot in terms of being another company that has a lot of potential upside, is producing chips that people want, and has the potential to grow alongside anybody else that's on the manufacturing side. So yeah, absolutely. I mean, this is a world where the size of the pie is expanding dramatically. It's not just one player, although there is one dominant player at this stage, and there are other players that are growing rapidly as well, of which AMD is one of them.
Will, it's been great chatting. Where can people find more information on you and your company? And if they're interested, the Palantir 2 or 3x leverage ETF?
It's 2x leverage here in the US. And then we have a series of products listed on the London Stock Exchange and other places in Europe, which are 3x. So just depending on what market you're in.
Okay. And where can people find that and you?
So graniteshares.com is really the central hub for all information around the products. And then more generally, we're quite active on X, which is at Granite Shares at X, or obviously myself at Rhind. We have a Substack as well, which is at Granite Shares, and we're active on LinkedIn as well. So most of the major social media channels along with the website.
Excellent. Thank you very much.
Thank you so much, David. Great to talk to you.